I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I added CCJ. Very nice trade today. I know a few guys are in that with me. I added IO. But IO upticked after hours. Where is it now? Came back a bit. Yeah, I got some, Charlie. Not too much, right? It's just super cheap stock. Basically gambling into earnings on a super cheap stock. So I know Stefan has some conviction in it. So, figure maybe I can make $1 or $2 myself. Anyway, incredibly strong day for the market once again. This uptrend is insane. We are at all-time highs in the S&P. We are at all-time highs in the NASDAQ. We are at all-time highs in the IWM. The SPYs here closed up 0.6%. Qs are up a little over a percentage point. And the IWM is up a whopping 1.8%. So, taking a look at these technicals, this IWM chart is sick, but I want to start with the SPYs just because that's where I always start. It's like we said coming into today, like we were really not very extended at all in the SPYs anymore. The last couple of days, even though they've been 2 green days in a row for the S&P, they were kind of mild. So that ADMA on the daily chart is catching up. And it's a bull market, and in a bull market, you're better off being long than short. It's really as simple as that. So S&P gave some continuation, and obviously that was especially all came in at 2 o'clock in the Fed meeting. I'm going to talk about the Fed meeting in a second. I just want to continue to analyze the big picture technicals here first. Qs were a little bit more extended coming into today and just went up again. I mean, look at this. How many green days in a row are we looking at for the NASDAQ? It's starting to get a bit wild. And the big winner, once again, is this IWM. Just up huge. We saw the TLT print lower, so interest rates move higher, so we do expect relative strength out of the IWM, but it was really just strength across the board, and the IWM had the most amount of it. I love this pattern. I think you guys are aware of that now, where you get a beautiful breakout ignition Maribozu type candlestick on high volume. We broke through 230 resistance, closed right at 234 resistance. Then we took a rest day yesterday. I thought maybe we could see acceleration yesterday, just because of the year-long consolidation that we've been in, but we didn't. We took a rest day, and then today we got the continuation. The IWM was strong even before the Fed print at 2 o'clock today. And just to reemphasize what I said the other day, markets work in periods of expansion and consolidation over time. I forgot to turn on my camera. Markets work in periods of expansion and consolidation over time. I'm looking at an IWM here, a Russell 2000 that's basically been going sideways for 10 straight months, that just broke out 2 trading sessions ago. This could lead to a huge move, basically a monthly bull flag breakout that we're looking at. This really could just be the beginning of it. I doubt it'll be straight up because it's usually not how markets work. And if it is straight up, it's actually not necessarily a good thing. We want the market to continue to kind of climb the wall of worry, that type of situation. When you just get the really fast moves in short periods of time, sometimes that can be more of a signal of euphoria. But IWM breaking out of a 10-month consolidation, this could really have some legs behind it. So Fed announcement today at 2 o'clock. That's what really woke up the markets here, particularly, SPYs are doing nothing all day until 2 o'clock. Qs are doing nothing all day until 2 o'clock. And then we caught a really big bid. From what I saw, there was nothing unexpected here. The only question was whether the Fed was going to start their tapering in November or start their tapering in December. And now we have the clarity on that. So, Zohar, I think you would only swing the IWM overnight if you already have it from earlier in the day. I wouldn't just buy it while it's in extended territory into the close and then swing it. I would want to have a solid profit cushion, from having it from a better price. Anyway, like I'm saying, the Fed today, 2 o'clock, the announcement comes out. They announced that they're going to do tapering starting in November, not December, which is, I kind of thought they were going to start in November anyway. So it looks like the plan is to be done with it by June. They're going to taper off, $15 billion a month until they, finish the tapering over the course of whatever that is, 7 months or so, middle, maybe 8 months, middle of next year. And the market ripped on it, which is really what I thought would kind of happen. The kind of intuitive first level thinking would be, okay, interest rates going higher, that's bad for markets. It's especially bad for tech. It's especially bad for the Qs. And that's not untrue. It's probably why we saw the relative strength in the IWM. But everyone knew it was coming. Everyone knows the tapering is coming. The Fed has been so transparent. Market is a forward-looking mechanism. So the market was aware and prepared that the tapering was going to begin and that interest rates could potentially start moving higher, and is aware of what those repercussions are potentially to the market. So when the market already has that prices in and then the event happens, it's almost sometimes like a stress relief. Like, oh, finally they're going to just start this tapering. Finally going to start this tapering. The economy's potentially getting better. And that, I think, is what really created this bid across the board here. TLT went down, interest rates went up. That should be bad for NASDAQ. We should be concerned about that. But the whole market just ripped on this. And again, just another huge day for a market that has just been super bullish since mid-October. And that's pretty much it from the big picture stuff. I really think it's as straightforward as the market having already priced it in. Now, as far as individual stocks go, first of all, we got the Fed. Obviously, the meme names potentially back in play with what Bed Bath & Beyond did. We had a couple other stocks from our morning meeting that we discussed this morning that worked out really well. But I guess let's start with this Bed Bath & Beyond. I'm not surprised that they sold this Bed Bath & Beyond back down. I'm just surprised the degree to which they sold it back down. They ripped this thing from $16 to $32 after hours yesterday. 100% move, just to bring it all the way back down to $19. That's a huge upside move followed by a huge downside move. And when I took a closer look at the announcement, obviously the announcement's solid, but as far as the change of the business model goes, and I'd be curious to know if Stefan, if you're listening, if you've got any further thoughts on this. But as far as the change in the business model goes, it seems to me like that they've already been focused on changing the business model. I mean, that's what they were originally talking about all the way back here in October 2020. That they were initiating a buyback, that they were going to be focused more on e-commerce, and I loved it. I loved it. I loved that back then. That's why I flipped from being a Bed Bath & Beyond bear to being a Bed Bath & Beyond bull, because they announced similar to what Macy's announced. I remember, I'm pretty sure it was this earnings report in November 2020 when Macy's announced that they were becoming much. I think this was an earnings report, and the numbers weren't fantastic, but the stock ended up performing really well on it because underneath the surface numbers was really good growth in their e-commerce department, and that, I think, is what has led to this huge bid. The only way that these kinds of companies can compete with an Amazon is to do, Best Buy, I think, was the first one that I really remember doing it some years ago. I just moved my 200 moving average. Some years ago they came out and they said, we're changing our business model. We're going to be more focused on, I think it might have been like back in 2016. We're going to be focused more on e-commerce. Our physical businesses are more like advertising than anything else. People who are customers, they can come and they can, buy something online and then return it to any one of our stores. And it was that change in mindset that I think is the reason why Best Buy was able to survive kind of the Amazon onslaught. And then Macy's, better late than never, they announced that, I think, at the end of last year. Stock has performed extremely well since then. And, Bed Bath & Beyond, I think, really did the same thing back there. So when they're coming out and they're saying that they are changing their business model, that doesn't come across to me personally as anything new. It just comes across as a great headline grabber. Now, obviously, they have a partnership with Kroger now. That's great. And the acceleration of the buyback, that's great too, of course. You got the company on the bid helping to squeeze shorts out. So again, the fact that they sold this thing down off that high from yesterday doesn't surprise me. It's just the degree to which they sold it that surprises me. Selling this thing back down to $24, $22 where there could be some support, definitely, okay, fine. But really, the fact that this thing couldn't even catch a bid, tried here for the first time into that $22 area and then still failed and broke down even further. Tried a second time, and I think I was involved in this trade. I think this is the one that I kind of called out to the team. I bought this back through 21 here, caught this pivot low, sold 60% of what I bought into this move higher, so I ended up getting stopped out. I get stopped out for a small profit on it. But even still, this was like the one of two only real intraday upticks on this Bed Bath & Beyond today, and it still led to a failure. And then the only other uptick was off of like 1950, which at that point is really like a 15-minute correction. They basically, corrected it to almost a 21 EMA on the 15, gave that a decent pop off that area. But even that, rolled over from there, continued to grind down. The sellers were there all day. I wonder if it's big short sellers entering. I wonder if it is long sellers who are coming in, because the continuation of any type of squeeze really didn't seem to come in on this at all. So, again, not surprised that they sold this Bed Bath & Beyond back down, just surprised at the degree to which they did it. And for me, again, just by having a strong game plan in place and really sticking to it, it's a win-win situation. It's not a matter of if I'm going to make money in this type of event when I had it from yesterday, of course. It's just going to be a matter of how much I make. I sold a very good percentage of my position into the move to $32 yesterday, and I pieced back into percentages of what I had sold at higher prices on the way down today. So definitely gave back some profit, but obviously still profitable because I was swinging it. How could you not be? But as far as like day trades today, this was difficult. You had to be super patient on it. And then, I basically tried it twice in a bigger way. One was the one I called out here, and one other time was I took a tight risk trade on decent size right here. When it broke through 20 for the first time, put in a low in 1988. I bought stock back through 20, caught a move to 2037. Nothing to write home about. But again, because the risk was so tight, it's still 2-to-1 or whatever, was able to cover enough of my risk before getting stopped out of that bigger ad as well. So both those bigger ads were small green trades for me with no follow through. So definitely a little bit disappointing. We all wanted to see kind of the easy money from the meme stocks and the short squeeze stocks really come back in a major way. I know AMC was still able to be up 4%, but nothing spectacular from AMC. Nothing spectacular. That, if anything, this GameStop looks gross that they ripped this up this way and then were able to drive it all the way back down. At one point, it looked like GameStop was going to be up more on a percentage basis than Bed Bath & Beyond. That never actually happened. So I don't know if anybody else has any of those meme type of names that actually worked out really well today. I didn't end up executing any of the other ones just because for the most part they never triggered. Like this Jumai finally triggered. This was like one of the few that triggered through my level, but it just triggered at kind of a garbage time of the day at that point. It was triggering at 11 o'clock, and with what Bed Bath & Beyond was kind of doing at that point, I didn't feel any sense of urgency to really jump into any of the other ones. I did trade that NNDM today, which is one of those potential squeeze type names. I especially liked that it had news, but this thing ended up being garbage. I was able to kind of trade my way out of it to be break even on it, like literally break even on it to like almost a penny, 0 P&L on it, which on a failed trade I'll take it. But kind of disappointing that the bull case today for sure was that a massive short squeeze in Bed Bath & Beyond from someone who was overexposed could lead to liquidation in other shorted stocks and then start creating bigger bids across the board. That definitely didn't happen, so that's a little bit unfortunate. Some other trades today, CCJ was one of the bigger ones on my radar. It caught a decent upgrade price target increase, I think to $40, I think it was. I'm not 100% sure. Someone needs to fact check me on that. So this one was definitely on the radar. I bought this thing pretty much right off the open. Able to see the volume coming in is, we always want that volume confirmation. Volume confirmation came in very quickly on this. Basically bought this very early with the low of the day as my stop loss, and obviously, got paid on it. $27 has been a huge level for this thing, and it really struggled with it intraday, but managed to close above. It kept, coming back below. Like, it was like, oh, it's going to break that 27, comes back below. Like, oh, it's going to break that 27, comes back below. And eventually gave an okay close. So big day one here on high volume. Maybe it needs a little bit more time in this 27. I'm swinging some, so let's see if this can go. So with CCJ. Shake Shack was one of my call-outs this morning that I did not trade. We had a call-out in this 2 days ago. It was a great trade. Yesterday it got brought up in the morning meeting. I said not to buy it if you weren't already in because it was testing this 21 EMA and testing the descending channel. It's difficult. And, of course, it was a good idea not to buy it. And, unfortunately, if anyone was swinging it from the day one, you probably got stopped out yesterday, which stinks. But it gave you the re-entry opportunity today. I didn't trade this. It sounds like some of you did. I took a brief look at it at one point. It looked like the opening price action here was pretty difficult. The volume was not as solid as I wanted to see. But after this pattern built out a little bit, this is a pattern that I like. A consolidation pattern here with an inside bar right as the ADMA that catches up. And then you got your acceleration out of it. Once it broke out of that and broke highs, then this just turned into a beautiful trend all day today. So definitely I think the entry on the Shake Shack was a little bit tougher. But we had it on the radar today. If anybody was able to capture it, that's great. There's a couple other ones that I spoke about for earnings today, like Marriott and Virtu, that traded pretty well. I never got involved in those either. Just kind of had too much on my plate. But if anybody traded those, they were pretty decent also. From the earnings front, I only had Marriott, Virtu, and I thought I had an ICPT. What did ICPT? Those are the only three earnings names I was looking at today. This ICPT was pretty good. Well, again, opening price action probably a little bit difficult. We talked about trying to be long off the open on stop loss versus 18. So you may have gotten shaken out of this early on in the day, but if you didn't, it was okay also. So those are the only three earnings names I had on my radar. They all worked out, pretty decently in one way or another. So again, overall, I think a really good day for the team. How could it not be when the market's given a move like this and we're being long focused because we're not fighting the market. We're managing our risk. We're recognizing degrees of extension. We're recognizing that the easier money is to the long side. And, we're sticking with that by looking for daily trade setups in the direction of the big picture. And that approach and that strategy has been working out really well. And that's why having the daily creation of our big picture game plan where we analyze bullish, bearish, neutral as far as the market goes. We knew to get out of the way here on the way down when the market got more neutral. We knew to switch back to being long focused as soon as the SPYs were able to get back above 445. And we've been sticking with that, just getting a little bit more cautious into larger degrees of extension and a little bit more aggressive into, when the market time corrects or whatever and it's not so extended. And it's been a great big picture strategy, and I hope everyone is continuing to get paid off of it. So that is all I got. Happy to take a look at any questions that you guys have. I'm going to scroll back here in the VTF to about 4:10 or so when we started the meeting and see if you guys got any questions for me. Did Airbnb report? I don't know. I don't know if they were on the list for today. I love this company, though, and this chart looks really good, so we can take a look at that tomorrow morning. What's MGM doing on their report? MGM trading up. Bullfly continuation through $49. Looking good. Skills going. Looks like it went and came back. I'll take a look at all these earnings reports and their numbers later or tomorrow. I'm seeing Pat posted MGM. EPS beats pretty decently, looks like. Sales beats as well. Okay. I think Stefan posted, I'm assuming this is related to Bed Bath & Beyond, so let me read it. While the seismic market recovery remains uncertain, we expect momentum to continue into the fourth quarter due to conversion of existing backlog and a robust sales pipeline. In addition, demand for our offshore data and digitalization technologies is growing, empowering clients to operate more efficiently and sustainably. Our team continues to improve efficiency while focusing on strategic initiatives that have the potential to transform the business, and we're seeing significant transactions. That's IO. Got you. Yeah, I was like, that language doesn't sound right to me. Yeah, a few of us got this IO here. Nice initial uptick to $3. I actually sold. I'm not allowed to say this, am I? It was before the meeting started, so I'm allowed to say it. I sold some IO at $2.99 into that uptick, so that was a good sale. What else? Scrolling through here, we got the skills numbers. EPS misses by a couple cents, it looks like, and sales miss also. So why did it uptick? Yeah, Oriel saying it looks like they sold Bed Bath & Beyond and rotated it into Macy's. This Macy's move has been incredibly, really impressive. This like bull flag continuation, rounding up. Today was another huge day for Macy's. This thing has just been out of control. Remember when we were looking at the $16 level back here in March, and it gave that huge break and 100% retracement. Stefan saying bye baby. Bed Bath & Beyond, I assume, is what he's talking about. Is probably worth $2 billion, and e-commerce is $3 billion in sales. So that would be $50 per share. Get the core business for free. Linen and Things. I vaguely remember Linen and Things. I don't remember what it was, though. Cash and debt's not the same as Linen and Things. They went bankrupt, I guess. Yeah, I mean, Bed Bath & Beyond is the leader. You know, and it's sometimes it's a good thing for a company like Bed Bath & Beyond if a company like Linen Things actually goes out of business. You know, the weak die off and the strong survive and become even better as a result of it. Big Z complimenting the calls on CCJ, Shaq, and Marriott. Thank you, my friend. Jerry. So the next question I'm seeing is from Jerry. You've been building into this Bed Bath & Beyond through the summer and the last gap down. Yeah, so I've been trading Bed Bath & Beyond. I actually did a little video on this today that should be on the Derrick the Trader YouTube soon. Speaking of the Derrick the Trader YouTube, for people who follow the YouTube, we're not going to be broadcasting it into t3live.com YouTube anymore. We're going to be broadcasting it specifically into Derrick the Trader YouTube. So that's where you guys got to find it. So make sure you give me a subscribe on that. But anyway, I did a video for that specifically on Bed Bath & Beyond today. Kind of talked about how, you know, I was shorting it back into October 2020 and made some money, and then kind of flipped when I started to learn a little bit more about the change in the company and the fundamentals and stuff like that. And then obviously it, you know, had these big squeezes. So I've traded this very consistently to the long side for pretty much all of 2021. And did very well with it. Made really good money into these squeezes. I was smart enough to recognize that they were extension squeezes, and Wait was very patient on buying back stock, and then caught the next squeeze. I caught really all three of these in a really big way. So this name has just treated me extremely well. The roll down here, broke support in the beginning of September. Obviously, the market was weak. And then it just announced like one of the most garbage earnings reports I remember seeing in a while. They just missed on everything so bad. And they kind of, they rightly destroyed the stock on it. And I held stock into the report. So I gave back a lot of P&L by holding stock in the report. And as we know, I've said this a million times, holding stock into an earnings report is always 100% of the time gambling. You can never know. And it's always, people ask me all the time, like, hey, Derrick, what do you think XYZ stock is going to do after hours today when they report their earnings report? I can try to take an educated guess on something, but the real truth of the matter is I have no idea. I can't possibly know. I have no idea what the numbers are going to be. And even if I knew what the numbers were going to be, I still wouldn't know how the market would react to it. And these numbers were terrible, but I was very well on the money, so I held some stock into it. Endured this punishment, and then when this thing started to base into this $14 area, started to build in heavier again, and then the bullish option flow started coming in all last week. The bullish option flow was obviously coming in yesterday, even coming in yesterday into the close. I'm sure no one knew anything about this announcement coming out. I'm sure it's just a complete coincidence that there was big institutional bullish option flow coming into Bed Bath & Beyond 10 minutes before a huge announcement came out. I doubt anybody would do an investigation into that. And then, huge rip higher on that. So obviously, I was fortunate enough to have a pretty big position going into yesterday. And I sold a very large percentage of it by that 32. And then, was building back in, again, you guys should all know the difference now between an ad back and an ad. I think I did a little video on that also. I think it's on the YouTube. It might not be yet. You can check it out if it is. I was mainly doing ad backs on the way down. The two ads I took, I explained already, and they were both, a little bit better than break-even trades. So that's right, Jerry. Next here from Marty. Thoughts on the Bitcoin ETF, such as BITO, BTF. It's very new. Cheers from Upper Manhattan. For sure. So it's interesting. It's for me, the BITO, and look, I am not a crypto guru by any means. I've got some Bitcoin, I've got some Ethereum, I've got, a little bit of a few others. I don't actively trade crypto, but I did think it was actually going to be really interesting just to see what these ETFs coming online was actually going to do to price. Because there's a couple ways to view this. One, which is a bullish case for it, is now people can, if you wanted to, buy crypto in their 401k and retirement accounts or whatever. And, as much as it's relatively easy to open up a Coinbase account, without a doubt, a lot of the older folks, especially out there, were probably not in a rush to go and do that. But now it becomes just easy and accessible with what they already have. They could get some exposure that could add new money flows going into crypto that could enable it to be stronger. That's one side. The other side is, I'm pretty sure one of the tops of Bitcoin was right when Bitcoin futures came online, like the CME or whatever. And it also having, futures and having ETFs, it makes it easier to short these things. So it creates potentially a little bit more of a balanced market. You can have people coming in and actually shorting it, and that would obviously weigh on price a bit more. So yeah, they're very new, obviously, and like basically any other market, we'll study the technicals on it. And right now, I think Ethereum made a new all-time high today, but Bitcoin, made a new all-time high by a little bit, almost could potentially even be a double top, and, has not been able to recapture that level since then. And it's just kind of been consolidating. So I don't have too much of a feel as far as a trading perspective on this thing right now. We'll just continue to monitor it, and as the technicals here develop in the ETFs, we can kind of get a better idea of if we should be getting involved or not for a trade. Cool. OCGN. Yeah, wow, look at this OCGN that they gapped up and failed also. It's another one of the meme type stocks. Next here, seeing from Chinggis. Do you look at pre-market price action for a stock when you enter to see when the ADMA catches up, or without pre-market data? I primarily only look at pre-market data pre-market. Once 9:30 comes around, I don't really look at pre-market data too much. The exception is volume. If a stock or a market, and the SPYs, the Qs, they're trading thick enough prior to 9:30. But a stock that I, for the most part, eliminate the pre-market price action as soon as 9:30 starts. I think it distorts the chart more than anything else, especially if you have something that didn't do any volume. Sometimes a stock that had a lot going on, like a Bed Bath & Beyond, I will pay much closer attention to the pre-market price action even after 9:30, just to get an idea. A stock that did unusually large pre-market volume. Look at this Bed Bath & Beyond on typical days pre-market. It's hard to see here, but there's zero prints going off up until 9:30, and then obviously yesterday after hours and pre-market this morning, Bed Bath & Beyond had significant volume. Bed Bath & Beyond after hours yesterday had more volume than it did in the middle of the day today. So that volume makes this a bit more significant where I want to know what the levels are. But even with this, I know what the levels are. I know what was important. 9:30 comes around. This is what my chart looks like. And I'm waiting for this ADMA to catch up on that time frame. Steve saying that Shaq was his trade of the day. I love it, Steve. I love it. Glad you caught it. Trip here. Yeah, this trip has been tougher. I'll never forget the frustration of knowing that China was basically shut down, and I was trying to short trip in February 2020. You know, you couldn't even travel in China. It was all shut down. And look at this move that Trip had. Upticking from $27 to $31.40. And I'm shorting this like an idiot on the way up instead of waiting for the signal because I was more focused on my thesis being correct and letting the price action confirm my thesis. I was just getting smoked on this short before it finally came down. Yeah, so Trip's got some support around, you know, this $32 area. I think we saw some headlines of an uptick in COVID in China. I don't know. I think it looks okay, though. Had a good wake-up day today, inside and up. So we'll see if it's able to do anything and as it kind of continues to hold that support. Bird was an easy IPO. I was actually off the desk initially when Bird kind of came out. You know, built up this consolidation. And then Big Z, I saw you call this out here at 12:15. Great call out into the VTF for the team. It's much appreciated. You know, kind of thing was kind of doing nothing, and then woke up on volume, and then woke up even bigger on volume here. I hadn't heard of this company, but Pat, who is now no longer behind me, had some good things to say about it. So definitely a good one. Tesla. It was interesting to see those Tesla puts hit today. I was asking Pat for a little bit more information, and he wasn't sure if that was an opening trade or not, and he was trying to explain to me how it's important whether or not that's an opening trade or whether they're just kind of, you know, rolling more options into a trade that they already have. So, yeah, I definitely wouldn't consider this to be a double top just because it's, you know, 3 days in a row has kind of hit that high. You do still have an insane degree of extension here in Tesla. Yeah, I honestly don't have too much of an opinion on Tesla at these prices. This thing just needs time at this point. It needs time. And I think, you know, we had such a great opportunity to be involved in this thing from $800 through this move. We called out this ascending wedge, and the move was probably bigger than people would expect. It's definitely bigger than, you know, what the technical analysis textbook would tell you the move should be. But at this point, I think this Tesla is very hard in this area. I think that you're better off just being really patient right now and actually not being involved in Tesla on a day-to-day basis here for a period of time while it's kind of resetting up. Also asking about PayPal and Twilio. Let's take a look. Oof, man, this PayPal is just destroyed. But, you know, you do have big support here. And it put in an okay potential retracement candle off support. I like that. I like when you have a beat-up stock that enters support and gives you, I would call this a retracement candle, and that the volume actually picked up on it. So PayPal here might be ready to actually give us a real bounce to at least this ADMA. If not, you know, more like 240 to 245 would be, I think, an appropriate bounce back for the stock, and then it'll be more difficult in that area, and we can reassess. So yeah, it looks okay after today's candle. Twilio, I don't remember what the earnings numbers look like that crushed this, so I don't have good feedback for you on it. As far as the bounce back, the oversold bounce is done. You know, it bounced back to this previous level, which could now hold as resistance, and the ADMA. So if anybody caught this bounce back, I actually think this is a great spot to book some profit. And if you didn't catch the bounce back and you're just looking at it for the first time, I don't think I'd be buying this into this 311 right now, into the level for the first time, into the ADMA for the first time. With all that said, I really don't know the ins and outs of what the earnings report looks like that destroyed the stock. So, DJ here, can bullish news or a breakout on a massive stock like Tesla or Microsoft be enough to reverse breakout an entire sector? Yeah, for sure. It can be enough if it's big enough of a stock like Tesla or Microsoft, it can change the entire index. You know, what percentage of the SPYs and Qs are Tesla and Microsoft? I don't know the answer to that off the top of my head, but you know, they're market cap weighted indices, so a large amount. A large amount. That's the answer. So yeah, not only can it move the ETF, it can move the stock for sure. In that case, as a follow-up to the question from DJ, in that case, could it be misleading that a sector is up X percentage when it's mostly one stock? Absolutely, and that's one of the biggest things I've been talking about with the market. And I know you keep talking about sectors, but this also does apply to the market. In a lot of ways, and I've said this on a number of occasions, in a lot of ways, the market topped in February 2021. There are a large percentage of stocks that are not only in corrective territory, they're in outright bear market territory. They're in outright depression territory from their February highs. There are so many stocks you can look at that are down anywhere from 25 to 75% from February 2021. Yet look at what the S&P has done. Why? Well, look at FANG. You know, if Apple and Microsoft and Tesla are moving higher, and Google's moving higher, and Amazon's moving higher, it almost doesn't even matter sometimes what the whole rest of the S&P 500 does. So yeah, for sure. You know, looking at the indices themselves can definitely be a little bit misleading. A hallmark of a bull market, like I've spoken in the past recently, is constant money rotation. So that's what I really want to see coming in, and that's what we've seen recently. We see energy be strong, and then we see financials be strong, and then we see they take a break, and tech comes in and is really strong. That's a hallmark of a bull market. That's what we want to see. When breadth weakens, because only Apple and Microsoft and Netflix are going up, it can definitely be warning sign. With that said, we saw breadth weaken on a couple occasions already this year, and it never led to even a significant correction at all. Next year from Robert, I have on my list ICPT today for the $18 level. If we can imagine movement of the first candle, yeah, that's why I said before when I looked at this thing, this ICPT looks like it was actually really difficult off the open, because I probably would have gotten stopped out of this. I would have bought this at the open versus 18. I would have gotten stopped out of it, and I don't know if I would have gotten back in. But let me read the rest of your question. Open at 18.34, pulled back to almost the previous closing price, but when we were approaching 18 on the way up, the candle was still red. Yeah, that's how candles form. Would that be a buy signal? Or yeah, so I think you're overthinking it a little bit. You definitely could look at it back through 18 though. You know, if it looks right to you on that small time frame, I wasn't watching this closely enough, but if it looks right to you on that small time frame as it's going back through 18, this is actually a trade that I take a lot. It's kind of what I did in Bed Bath & Beyond today. As it comes back through the level, you can be long through the level versus lows, right? Again, similar to what I might call out in kind of this Bed Bath & Beyond on this occasion. Not that 21 is a level necessarily. It was just kind of where the stock traded down to equilibrium for the first time. And then it created this hammer, though the hammer was on non-confirming volume, which isn't great. I was like, all right, it's actually pivoting into equilibrium. They really beat this thing down. Let's see if the buyers actually start coming in. So I bought this back through 21, or same thing here. I bought this back through 20 for 13 cents worth of risk. So, you know, similar to what you're describing on ICPT, you could definitely, when you have that low to trade versus, trade back through your level on that. And then, you know, your risk is appropriate, right? You're coming in on actually, it's still 40 cents. I didn't realize there's that much. 40 cents risk on a $17 stock, $18 stock is a lot. But that's how, at least in theory, it would work. You're trading back through the level versus the intraday level that it provided to you. So yeah, for sure. And the color of the candle doesn't matter as much at that time, though you do want it to obviously give you a significant rally from there. Next from Sebastian, asking about Dix. DKS. Yeah, so this Dix, I know, reported earnings. I looked at it briefly this morning in my pre-market research, and I kind of took it off of my radar. I don't honestly remember why I took it off my radar.
Nike news.
Oh, it wasn't earnings. It was Nike news. That's right. But I did look at it based on that Nike partnership news briefly, and I took it off my radar. I don't fully remember why. The technicals here look pretty decent through like 129, 130. Through this pivot is 128.86. And you're cleaning up above these like negative Maribozus and some resistance above 130. So it just wasn't really on my radar, but I don't hate the idea of looking at it at that area. So you bought 129.01 for an opening trade, and you have 25% of the position. Great. You got a $2 profit cushion and a $1.30 stock, so you're kind of meeting my 1% rule. Broke some levels today. The tail here is a little bit more than I would like to see, but it's not terrible. And you get the volume in. So you kept 25% of your position. You're in a win-win situation, and you're looking to maximize your reward. I love it. Good stuff, Sebastian. Keep it up. DJ with another follow-up. Do you think it's better for a newer trader to make one A-plus trade in a day or a handful of B trades? Obviously, discipline is important, but there could be more to learn from the latter scenario. Thinking emoji. I think you can actually make emojis into the VTF itself. So DJ's question: is it better to take just one A-plus trade with your full day's worth of risk, or is it better to spread that risk out amongst a bunch of trades that maybe are not all A-plus trades? His question also says specifically for a new trader, and that's the important kind of clarification point on the question, because I think depending on your degree of experience, the answer is different. I think if you are an experienced trader and you have an A-plus trade, you're better off putting your whole day into that A-plus trade than spreading it out. I think if you're a new trader, you're better off spreading it out. And the reason why is, no offense, new traders just aren't good enough yet. You haven't seen enough yet. You don't have enough experience yet. You don't have enough repetitions yet. I know for myself, when I was brand new in trading 10 plus years ago, for the first at least 6 to 9 months of my career, I wasn't good enough to be able to recognize an A-plus trade in real time. And I remember I've spoken about it. Maybe I'll make a video about it. I remember specifically seeing multiple A-plus trades in hindsight when I was new. Because I worked hard. Market closed. I didn't stop working. I put in hours and hours and hours into statistics and journaling and trade review and all this stuff. And there were plenty of aha moments that took place in hindsight where I was like, oh man, this was really like an A-plus trade. Risk-reward probability was all on my side such a fantastic way. It's too bad I, didn't size up and take this bigger. But it wasn't too bad because I just wasn't good enough yet to recognize it. So I think that newer traders should take uniform. I have a video, I think, on risk skew, DJ, that I think is on YouTube that you should check out, where it talks about the concept of taking more risk in A-plus trades and less risk in B trades. And I think I specifically say in it for new traders not to do that. I think new traders, you're better off keeping things as uniform as possible and then adding a little bit more complexity with risk skew based on a grading system on your trades kind of over time. I think that's the better way to kind of go about it, because again, you don't have the experience. It comes with time. For me, it was in hindsight, and it was in hindsight over and over and over again until eventually, like 9 months of my career, I had an aha moment in Visa, and I saw it in real time. Everything kind of lined up, and I took the biggest position I had ever had in my career, like the most risk I had ever had. I remember I almost got stopped out. It went 2 cents away from my stop loss, and then the trade worked really well. So yeah, that's the answer to your question. Mike, bringing up the what are these called? Cruises. Yeah, RCL. Again, I really like when stocks do this. Big day, rest day, continuation day. Didn't Norwegian have earnings today? I think it did. So I don't know what the numbers look like, but it traded well on it. Looks like they gapped it down initially and then they brought it back up. So that bodes well for the sector also. And yeah, CCL, similar pattern to RCL. I like this pattern. This is actually my favorite one of the three right now. Wake up day, and I think it was my least favorite. Just the other when you first asked me about it 3 days ago, I think I said CCL was my least favorite. But the chart changes, the story changes. Good day, rest day, looking for that continuation. CCL. Next here, EA is making highs from Ariel. Oh yeah, wow, still is. So that's nice. So maybe keep an eye on ATVI tomorrow. Yeah, they bought back ATVI a little bit today. Zillow was destruction. You know, it's hard with these things because, you know anybody who was trying to buy, and I know a lot of people were, even I was. Luckily, I didn't get stuck in this earnings report. We're trying to buy off like this, $85 and $90 support levels in Zillow, and then this thing is trading well and pulls back, and maybe people held this into the report. Anybody who's bought this over any of this period of time is out of the money. So even if it's a better discounted buy or whatever at these prices, sometimes you really got to let the out of money sellers wash themselves out first. Big Z saying that Apple is 5.9% and Microsoft is 5.6%. I'm not 100% sure if that's the Qs or the SPYs, but either way, Tesla's about 3%. Either way, that's like I'm saying, that's such a large percentage that those couple of stocks in and of themselves can really move the whole market. Where can you track market breadth? That'd be a good question for Pat. I don't know if Pat has a spot where he looks for it. I kind of just pay attention to those numbers peripherally in my own research process. I usually end up reading it kind of somewhere. I know sometimes Pat's posting the breadth numbers in his morning note, so I'll see it in there. It's not something I look at daily, but it is something I'll look at when it becomes relevant, basically. Tesla is 1.4% of the SPYs, according to Google, and Apple is 5.9%. Yeah, it's so crazy. It's so crazy. And Vuzi we can pay attention to for tomorrow as well. All right, gang, it's 5 o'clock. It looks like I got through everything. I don't know if there's anything else on YouTube because I don't have an eye onto the YouTube. It usually gets posted for me here in the VTF. But it looks like we basically covered everything. So anyway, good stuff, team. A lot of great trades today. I will see everybody tomorrow, and we'll try to do it again. See ya.